Welcome, everybody, to the Beer in Boots podcast, and we're excited to have you today where we have a very exciting episode with a guest speaker. First and foremost, as you know why we've started this podcast, we want to bring you the conversations that you should be having with your insurance broker on a day-to-day basis to your phone screen, whether you're in the office or you're on the couch later this evening, to provide you the answers to the questions that you have not asked yet. So diving into who we have on today's episode, Maria Athanas, who is the commercial benefits consultant that we utilize most, and she's part of the Gallagher team. So a big part of your insurance spend is exactly what we talk about, property and casualty insurance, whether it's your GL, your auto, your workers' comp, or your inland marine or excess. But there's another portion of insurance that is an expense to you, and it could be a fairly large expense. And knowing how to handle that is vital. And I would say just from the past, honestly, 10, 15, 20 years, just within the SCNRA, the Specialized Carriers and Rigging Association, this is a topic that really doesn't get covered. So we're looking to lead the initiative of bringing that solution to the crane and rigging space. Now, Maria has been working with us probably the past 3 to 4 years, and at this point, probably currently insures about 30% of our crane and rigging companies. So we thought we would be doing a disservice not to have her on this podcast specifically. So, Maria, I know as usual, I just spoke a lot. So if you could start, give a little bit of a self-introduction of yourself, and we'll go from there and get this podcast started.
Sure. Sounds good. So I'm Maria Athanas. I'm a health and welfare consultant with Gallagher Benefit Services. So really, I serve as a trusted advisor to my clients in building sustainable total rewards programs and delivering innovative solutions to help them achieve their benefits, goals, and objectives. I think that, one of the reasons I got into the business too is that my true passion is really in helping people. And so that's exactly what I do on a day-to-day basis. Help people, help my clients, and like I said, help them with their total benefits package to make sure it's sustainable, but also attractive for their employees.
And hello to my favorite listeners. The beer part of the Beer and Boots podcast is here as well today. I'm really excited to be able to dial into some details for you all on what Maria can do for you. And hopefully you learned some things today, as well as I'm sure Cam and I will too. So I thought we'd start off with a very broad question and then narrow it down and dig into some of the underlying details of what matters to the crane and rigging owners that are listening today. So I wanted to start with the status of the commercial benefit market. Is there anything you're seeing in the market currently, and then based off of from what you've worked through with our current clients, that have been triggers for them, that have been maybe some pain points that we want to focus on?
Definitely. So I think the biggest thing is that healthcare costs are continuing to rise year over year. And on the medical side of things, they're rising, to about inflation amounts. But the pharmacy spend, specifically on specialty drugs, has just been rising even faster than ever before. And that's mainly due to a lot of multi-million-dollar medication therapies that are out on the market, mainly cancer and hemophilia drugs. And so what we're seeing is that these multi-million-dollar drugs, if one of your employees are a candidate for this drug, it could really cost a lot. Whether you're fully insured and you're working towards a renewal every year, or you're self-funded on the benefit side and you're paying claims weekly, these are really, really costly but helpful medications. So what I'm really working to do is preparing my clients in the event that they have a patient candidate for this type of therapy. And the way that we do that is mainly through plan design. And the key is just ensuring that whatever plan design changes or modifications that we're proposing to make are not too difficult to understand by the employees, because a lot of times there's benefits that get put in place that are really difficult to understand, and then they're not used properly and they're not used in the right way. So we want to make sure that they're not too difficult to understand by the employee, and then also by the provider, and then also that patient care is never being compromised. So those are some of the things that we do just to combat those rising costs, specifically on the pharmacy side.
See, and that's the reason right there that Cam and I wanted to make sure we have Maria on here, because I know we would be doing all of you a disservice to even begin to try to peel the layers back of what she's discussing. So really happy that we're able to do this. Now, I think based on what we've talked about before, you say many organizations really at this point have no defined strategy or ongoing financial monitoring to keep their benefits packaging sustainable. Can you elaborate on that or provide solutions of what you're doing?
Definitely. So what I've been seeing a lot with crane companies is that their broker is more of a traditional broker, and they haven't really assisted them with any kind of a defined multi-year strategy. No ongoing financial monitoring, nothing in place to keep the benefits package sustainable. It seems like they're only around during renewal time, maybe one other time during the year, and it's a mad dash to the finish until open enrollment and renewal time. And so what I do with my clients is a lot different. We are constantly in front of them, constantly engaging them, constantly looking at financials and talking about strategy, because like I mentioned, with the healthcare costs rising every year, we need to continue to look at ways to mitigate costs and communicate and implement strategies and put those in place. And so strategic planning is really at the heart of what I do with my clients. And I find that's a lot different than some traditional broker companies that are out there. And so included in that are our ongoing financial meetings, which are so important. We look at plan performance, we look at high cost claimants, we look at pharmacy drug costs, and we also do financial renewal projections. And these are really key. Usually we start them if you're on a January 1st plan year for your benefits. We usually start the renewal projections in Q2, and this just helps prepare clients financially for what's to come. We look at your medical claims, we look at your pharmacy claims, and then we create a projection about what we think your renewal will come out at. And then we talk about budget. And if maybe you think that that's too high, then we put a plan in place about what we would do to lower that cost. And we continue to refine it meeting over meeting so that when it comes to renewal time, there's never a surprise. We have a full plan in place. Yeah.
Now, is there anything that I know a lot of our guys and a lot of our crane clients, guys and girls, they are union companies. Mm-hmm. And so they're going to get a lot of their benefits through the union. Is there anything, any solutions you can provide or anywhere you can step in to still work with them, even though they're using those union benefits?
So voluntary benefits are great to put in place if you have a union population that maybe has medical, dental, vision benefits through the union, but you still want to offer something valuable to your employees. And essentially what voluntary benefits are they are 100% employee paid benefits, but they're very competitive because we negotiate group rates. So instead of you going out individually and purchasing cancer coverage on your own, we would offer cancer coverage as a part of the whole group as a voluntary benefit, and it would be rated based on the entire group. So the rate is a lot lower and more competitive. So like I said, these are great for unions because there's no cost to the employer.
Okay.
You're offering it as an additional benefit, and the convenience of it is that it can be payroll deducted, and there's a lower group rate. So a couple other examples of voluntary benefits are hospital indemnity, where you get a lump sum payment if you ever have a hospital visit, or accident insurance, where you get lump sum payments if you ever have an accident. If you have children especially, accident insurance is great. If you break an arm, you get a lump sum payment, things like that. So voluntary benefits, really great for union populations, but also really great if you are looking to enhance your current benefits package, but you don't want to put a lot of money towards that. How can we still enhance your package while not putting a lot of money towards it is through the voluntary benefits, because they're employee paid and they really create that complete benefits package.
I think I've been very fortunate just in regards to how my relationship has been with working with Maria to find such a proactive person within this space that aligns with the values of our team, of again providing our motto, the answers to the questions not asked yet. So luckily, we have socks coming out for the Beer and Boots podcast, as you can imagine. Little beer mug with a pair of boots, because I need them right now because my socks continue to get knocked off by Maria. And diving into, and we're not going to get too much into the details, but luckily I was fortunate enough
I love it.
to be in the car with Maria. We just finished a meeting with a client that she now works with, and I had a call from one of our clients, about 120 group, 120 life group, and they're going through that renewal process right now. And Maria was able to just deliver the news on that call of, you're having a flat renewal, which another aspect of knocking my socks off while driving. Luckily, we were in Texas. It was hot, so it worked. But delivering news like that, because, again, we've talked about the state of the crane and rigging insurance market from the property and casualty perspective. No market's coming out and saying we're flat this year. And even some of the situations where I've sat through where Maria has brought clients on board, hearing how their renewals have gone, where we were told we had a 15 to 20% increase 3 days before our renewal, and she's delivering this news of a flat renewal 60 to 90 days before that process, I thought was key. So I know we have some other topics, but something that I really want Maria to hammer home is that timeline to a renewal, because that's something that we hold near and dear, because obviously it's a huge expense. Planning for that is important, and getting that information well in advance to set your expectations of one of your largest expenses is key. So if you could, Maria, touch base a little bit on that renewal timeline.
Sure. So like I said, we're talking all year long. We're not just talking at renewal time or a little bit before renewal time. So typically how our standard timeline works is we start looking at pre-renewal strategy around 210 days in advance of our client's renewal date, which is, like I said, so important because we need to have a plan in place. We can't be scrambling last minute trying to put anything in place, because usually that's going to end up being the wrong decision. So we start around 210 days in advance, and then if we ever need to market, right, we need to look at changing carriers or anything like that, we start that between 150 to 90 days in advance of the renewal. So then your renewal will happen about 90 to 60 days in advance of your planned start date, and then annual enrollment. And maybe the first year, if we're getting things set up, there is a little bit of a rush. But once we get on a good timeline, that's the pace we typically like to follow, so that, like I said, there's never any surprises. Everyone's always prepared. Financially, you're prepared. You know the budgetary constraints and things like that.
So, like I've mentioned, I've sat through a lot of meetings with Maria, as well as I've sat through a lot of meetings with benefits consultants within this space previous to Maria, and I barely understood it. Now, I know you're not surprised, because some of you may know me, and it's like, yeah, Cameron, that makes sense. You didn't understand it. But as a property and casualty insurance broker, if I couldn't understand the commercial benefits presentation from a commercial benefits broker to our insureds, I would say that's not good, because not saying our insureds aren't fully dove into this in regards to how it works, but Maria has, if anything, simplified that process. One of those specific resources that I've seen be a head turner as well as a clear and concise solution for our client base has been the Benefit Advocacy Center. So your Benefit Advocacy Center has been a popular and unique solution for crane companies. Can you tell us a little bit more about that?
Yes. So we call the Benefit Advocacy Center the BAC, BAC, and essentially just think of it as an extension to your HR team. The purpose of the BAC is to help employees better understand, use, and appreciate their benefits package. Because at the end of the day, you could have the best, most expensive benefits package in the world. But if your employees don't understand it and they don't understand how to use it, then their perception of it is that, oh, my benefits are awful. So the BAC is a really great solution that, like Cam said, has been really popular with a lot of our crane companies to really help employees. So our BAC is made up of licensed benefit advocates. They're headquartered all over the United States, and they are available for your employees at any time. They can help with new hire benefit support. They can help with open enrollment support and education. If someone needs an ID card, they help with ID card resolution. Any kind of assistance with locating an in-network provider. Let's say you need to see a therapist and you don't know how to find an in-network provider. Our BAC will help your employees. They even help explain benefits. They help explain prescription coverage. If anyone has ever tried to get some kind of a high-cost medication that requires prior authorization, it can be a bit of a headache sometimes to figure out who you need to call to do what. And our BAC helps your employees understand that and helps them resolve those issues. If you ever get any kind of balanced billing or you have claims issues, let's say you had a number of surgeries and you're getting bills and you don't understand, do I need to pay this? What's going on? Are my benefits even applying here? They would just call our BAC, talk to a health advocate, and they would help them resolve that solution.
Do they have like a chat function too or anything like that?
So there is a phone number that employees can call, and it's a dedicated phone number just for your organization, and then also an email if anyone prefers just communicating via email. We find that phone is always best, if possible, just to talk out things and things like that. But whenever you're sending pictures of bills and all of that information, that can all be done via email.
And I'm learning too, like I said we would today, and this sounds great.
Yeah, and just a direct and immediate effect that I've seen from that. So you're handing employees these medical cards. And on the back, it might say the healthcare company and their number, and you're calling them, and it's a 1-800 number.
Yep.
And that person on the other end of the line, they might not even be in the same country as you currently.
Exactly.
In regards to that. So I just can see it, and I've even heard of the frustrations. It took 3 to 4 hours to just get the answer that I needed. So instead of having that number to that healthcare company, they can have the number to this Benefit Advocacy Center listed on that healthcare card, correct?
So we can list it on open enrollment guides or on any kind of communications with the healthcare card. Typically, the healthcare company's customer service is listed, but we make sure to communicate the heck out of the BAC and make sure that employees know to call the BAC for anything. So it really eliminates the need for an employee to ever go to HR and ask a billing question, ask a question about ID cards, because we find, especially with a lot of crane companies, people who have simple issues, like just what their member ID is. They're talking to HR, and it takes up a lot of time for HR to resolve those issues when the BAC can do it really quickly. So the other nice thing that the BAC does is we provide reporting too. So on a quarterly basis, you can actually see what your employees are calling in about. And it's important as a client for you to look at that, but also it's important as a consultant for us to look at that piece too, because then maybe we know, okay, a lot of people are calling about how to find an in-network provider. So maybe we structure communications around finding an in-network provider or talking about that a little bit more during open enrollment. So it's really helpful on our end as well, so we know what your employees are calling in about.
Basically, it sounds like the back is the greatest tool ever, and all the listeners should be wanting it.
I've always referred to it as the back, the BAC, the blood alcohol content, but I am glad there is a better acronym
Carries
than that.
the team on the back.
Yes.
On their back. Like most people, I have been watching the news lately, and I feel like there is a lot I don't understand. So I wanted to ask you a question and see if this does affect our clients or has the potential to affect them. And I may even word this wrong, but there have been news reports I've been seeing about possible taxations if clients aren't carrying, or if our clients aren't carrying long-term healthcare insurance that is available for their employees. Can you maybe explain that better from your point of view?
You are totally on point with not understanding it, because it is the most confusing topic
Perfect,
ever,
okay.
and it's always
just me.
changing. No, it is not just you. What I say right now might change in a couple weeks or in a couple months, but as of today, what we know is that long-term care is a really important focus due to some recent legislative actions, which I think is what you're referring to. So what's happening is about 50% of long-term care expenses right now are funded by state Medicaid programs. And because long-term care is so important and also so expensive, in an effort to plan for the future and to boost those state healthcare budgets, what Washington State did, the state of Washington, was they enacted a long-term care solution where payroll tax deductions funded a state-run long-term care program. And that program just provides a capped long-term care benefit to help individuals pay for any long-term care, nursing home, things like that, costs if they ever were to end up needing that. For employers in the state of Washington who had a private long-term care insurance in place, they were exempt with an approved exemption. So they didn't have to include that taxation on their payroll for employees. So right now, the legislation is currently just in Washington State, but
It's official there, like it's
official.
passed. Okay.
Yes, it's been in place. But there's other states like California, New York, Pennsylvania, Connecticut,
Okay.
Rhode Island that are considering similar legislation with taxation. So this is really important because, like I said, we are always working on strategic planning. So I'm working right now with my clients who have employees located in some of those states that I just named, in taking a proactive role to responding to these coming changes. And one of the ways that we're doing that is helping our clients put in place some kind of a long-term care solution. What we've found is the most attractive long-term care solution is not through the state-run long-term care benefits, because they're usually not rich and they're not as helpful as they could be if an individual didn't have private long-term care, but also a benefit where if you don't ever need the long-term care insurance, you're still getting something else out of it. So what we found is a hybrid life and long-term care solution is far more robust and better pricing as well to offer in place of that state-provided long-term care benefit, and then you can avoid any kind of possible taxation.
So basically, if one of our clients, let's say in Washington, did not carry long-term private health insurance, they could be taxed for not carrying that.
Correct.
For each employee? Like, is it?
For each employee. Each employee would be taxed.
Wow. Regardless of age.
Yes, regardless of age.
Sounds pretty messed up.
There's a lot of moving parts, and there's a lot that is changing every day. But one thing we know, too, that's important is that even if you're not located in any of the states I named, if you have an employee in one of those states, you would have to apply that payroll tax. So really right now it's all about preparation and putting a plan in place for the future. Some of our clients already have maybe a hybrid life and long-term care solution already. And we just refine it, talk about it a little more to make sure it meets the qualifications that these state programs are putting forward. And if a client doesn't have a solution in place and they're interested in doing so, we can totally help them with that, show them what's out in the market, show them the pricing, and help put a plan together of when they want to implement it.
And I think that's what's the most exciting thing hearing you talk about this, and kind of the theme of our podcast is it's only happened in one state, Washington, but you are prepping people. You're already game planning what to do if this passes in other states, and having the conversation before things are even enacted. And like we always say, having the answers to the questions that haven't been asked
Bingo.
yet.
Exactly.
Maria, we've asked you a lot of questions today, and I'd have to say it's been great having a guest speaker, so it's not just Cam and I talking. But I do have to ask, do you have any questions for us?
First of all, thank you for having me. I had so much fun. And Athanas, I don't know what could go on your socks, but maybe a Greek flag or something would be great. If you're ever interested. Yeah. I know you have been with Gallagher for about 4 years, I think now. So you were Allied, and then in 2019, you moved to Gallagher. What's changed?
Yeah, so I will say whenever we first were told the news that we were being acquired by Gallagher in 2019, I think with anyone, it's fear. Like, oh my gosh, what's going to happen? What's going to change? But I think all of the changes that we've had have been amazing. I mean, we're able to sit here today and include you in on this podcast and your knowledge, and we have a connection to someone in the benefits team that we would have never had that before. We would have just had to tell them, hey, call someone else. So to be able to keep it all under the Gallagher umbrella and in-house, I think is the most amazing thing. And I'm sure you have clients too that you're able to connect them with, property and casualty as well. And we have clients that call in, people buy planes and luxury cars, and they want to do all these crazy things that we can now have all the offices. Every branch has its own specialty. So be able to just pick up the phone, know you have that connection, know there's someone in Gallagher that can help point your client in the right direction has been, in my opinion, one of the most beneficial things.
Yeah, and to piggyback off of Landon, so those that didn't know, because we've mentioned it multiple times, because you do see that we're Gallagher now, we did decide to sell our business in 2019 to Gallagher. When we did that, we had a lot of options of who we could sell to. And you just look at the brokerage firms out there, because a large growth model for brokerage firms is acquisitions, and that's smart. So you look at the top 10, for example. Gallagher right now, the ownership structure, they were brokers. Pat Gallagher started as an intern. I think that is so incredibly cool versus the majority of other large brokerage firms. They might be private equity, they might be owned by banks, etc. And just being able to be with a company of the size of Gallagher, being one of the largest brokerage firms that's still owned by brokers, and their strategy behind their acquisitions are providing answers to the questions they haven't asked yet in regards to acquiring niche-focused businesses that can add to their portfolio of, we didn't necessarily have this piece, we're making ourselves stronger with that. So what I think is really cool, and Gallagher continues to build off of this, but like our division, our company is Gallagher Global Brokerage. We're the retail broker, just like we were with Allied. Maria being on the Gallagher Benefits Services side, which is one of the largest commercial benefits brokerage firms in the country. And there's others too. There's Artex, one of the original creators of captives in regards to being a captive administrator. You have RPS, which is the wholesale and program creation. Like we talk about the crane insurance programs out there, they're a company that does that as well and has a current crane insurance program. You've got Gallagher Bassett, which is one of the largest and oldest third-party claims administrators within the country, and they continue to grow with that, with now having Gallagher Re. You see, in regards to why insurance costs go up, you hear the word reinsurance, and Gallagher, with being as proactive as they have been, added that to their portfolio as well. So it's awesome to have a company to work for now that is just as proactive to us in regards to providing us the solutions to keep running. Sorry, I didn't drink my coffee today. To keep running, to help us keep running, to provide those solutions and those answers to the questions you haven't asked yet. So, did that answer your question?
Totally. I mean, I feel the same way.
Very short-winded.
No, yeah, it did. I feel the same way because we, many years ago, sold our business to Gallagher as well. And everything that you said resonates completely with me. And I'm so glad that we made that decision as well.
So, Maria, thank you very much for coming on to our podcast today, because we really think the solution that you have to offer is perfect for the crane and rigging industry. And honestly, just from hearing from clients that have always asked, hey, you've helped me with the property and casualty side, but I really need a solution on the commercial benefits side.
Here she is.
And before, we didn't have one.
Yeah.
And it's nice to have that, as well as it's within the Gallagher realm of businesses, which has been great. So if anybody is interested that's listening to this podcast and getting in touch with Maria, please feel free to reach out to either Beer, Boots, or Athanas. We might even, who knows?
BCA or BAC,
Yeah.
right? Oh, well, if we go by CAM, we'll just use
BBA.
you.
Yeah.
BBA.
Bab.
BBA.
Yeah. We got Bab coming. 2024, new things coming. So thank you very much. And listeners, thank you very much for joining into the Beer and Boots podcast today to listen to what Maria Thanis has to offer. I'm going to let Landon say her part first as far as beer out.
Yeah, and I think also not to offer up Maria's time, but let's say in the near future, if we do get a lot of feedback of other questions or things our listeners are interested in, I'd hope to say she'd be more than happy to come back on in the future and we can do a little round 2 episode. But thank you all for tuning in today, and beer out.